I see a few more people are trickling in, but let's just get started. Welcome everyone to Retail X Series. For all of you who this might be their first event attended, welcome. You will be put on our mailing list so you can hear about future events. For those of you who have attended before, you know me, you know kind of the drill, but I'll go through it again. This session is being recorded. If you have to leave early or want to go back and look at some of the pieces again, it'll be posted on YouTube within a couple of days. We will also be taking audience questions. So we'll start with a moderated kind of chat, and we will go through that about for 30 minutes, and then we'll kind of get into your Q&A. So you can either put them into the chat or wait till we get to that point. I will also tell you that we have another session next week that is fundraising from VCs with Amanda Person from Founder Collective. That's next Thursday, the 29th at 1 o'clock. So I hope I see you all then. And I probably should have introduced myself to begin with. I think most of you know me. My name is Sapna Shah. I'm an angel investor, and I've been running these Retail X sessions since September of 2017, and more to come. So with that, welcome, Eytan. So happy to have you here.
Great to be here.
So can you start with telling us a little bit about yourself and your background, and then a little bit about your company and what it does?
For sure. And one thing that I want to say before getting started, Amanda is one of our investors. So it's that's a small world and it's exciting.
Yeah, she mentioned that to me actually, and I'd forgotten. Yes, so you guys are back-to-back Retail X speakers.
That's great. Okay, cool. Well, hello everyone. Well, thanks for joining. My name is Eytan. I'm the co-founder, Eytan Daniyalzade. I'm one of the co-founders of Toolio and the CEO. Just to share a bit about my background before diving into the company itself. By background, I'm an engineer by training. I did another startup before that we sold to Walmart, and I was at Walmart for 5 years afterwards. Spotted an opportunity and decided to leave the company to build another startup, which is what we're working on now, which is Toolio. And just quickly on Toolio, Toolio is a next generation merchandising platform for brands and retailers. Toolio helps retailers plan their most important assets, which is inventory, all the way from top-down financial planning, all the way down into item-level inventory demand forecasting and managing their replenishment process.
And how long have you been in business with Toolio?
Yeah, so we started the company in 2019, beginning of 2019. So it's our third year now.
Congrats, that's great. So most of your history has been during the pandemic. Great.
yeah, it's been definitely interesting. I'll dive into that, and it's been in some ways helpful for us to define the vision of the company.
Yeah, we can definitely talk about that. But let's start at the beginning. So let's start. This session's all about kind of B2B sales, and I think the founders on this call are really looking for kind of those tips on hearing your story and how you did it, and particularly those kind of first early sales, which are always so hard. So kind of rewinding maybe back to 2019, at those earliest stages, before you even had a customer, how did you kind of start targeting your first customer? Who did you think would be the right customer? Can you kind of walk us through that sort of process that you went through?
For sure. So just to take even a step before starting the company. So while I was at Walmart, obviously it's a great place to see how retail is being done at massive scale. And at Walmart, I was in charge of all of their in-store technologies, anything that is customer facing around making the shopping experience in the Walmart stores better by using technology. And even though that was my focus, I got to see a lot around how they were doing all the supply chain, how they were running their merchandising operations, etc. And one thing that was always surprising to me within Walmart is that I'd see all the planners and the merchants that are making the decisions around which merchandise to carry in their stores, always looking into giant spreadsheets in front of them and trying to make decisions by stitching data from different places together. So that helped me really see the pain point firsthand while being within Walmart. Afterwards, obviously being coming from a large enterprise, that made me think about, okay, larger enterprises should have the same set of problems. So I decided to leave Walmart and then started looking into this. And very early on, I ended up reaching out to all my network, ended up talking to tons and tons of different retailers. And I realized that this problem was the same across all the different retailers. At that point, my focus was only enterprise because that's what I knew, what I came from. And though in terms of the question around like the first, the second customer, that's always going to be the trickiest because you don't have a product, you just have a pain point that you are trying to solve, and you're just trying to find people that are willing to bite the bullet. And the way that we came about to finding the first customer was, in this case, for our case, it was like through an investor connection. A lot of these retailers, especially the ones that have innovation labs, might also be investors into retailers to help them scout new technologies, new solutions with a very specific focus that they have. In this case, one of the retailers that became our first customer was already looking for a solution in this space. We got connected to them, and they were a lot more, I'll say, an early adopter in finding the solution in this space. So that's how we got connected.
So you get connected to them, and you know that they're interested in this space. But to your point, you didn't have kind of the full product built out at that point. So kind of how did you manage kind of that first customer while building your product, kind of getting their feedback, all of that?
Yeah, there's two things. One of them is, well, it's a matter of like how acute the problem is for them. In this case, it was a very acute problem. They didn't have a good process to manage their merchandising buying process, even though they're like a multi-billion-dollar company. And that made them willing to really be a partner and work together on coming up with a solution. Another thing is that a lot of these retailers, though they have like very large budgets, is primarily for inventory, and they don't have like a lot of budget for like doing like, neither the know-how to do the technology development in-house. So in this case, what they really trusted us was our track record, me and my co-founders, track record in having built a lot of different technologies within Walmart and prior to Walmart, and they wanted a solution for this. And yeah, they were ready to work together. One thing that we did a lot though is, so for the first year, it's very, very important to spend a lot of like, especially if you're building something in enterprise SaaS, and maybe like if you're not coming, like usually the people that are building solutions are not necessarily coming from that discipline themselves. In our case, I wasn't coming from planning background, though I knew the problems. So we spent a ton of time sitting right next to the planners and the merchants and really soaking up all the information that I could to understand what would be a great solution for them. And lastly, like one thing that I'll say is that, especially if you have an early customer pre-product, you have, like, by definition, you're going to end up doing some work that is not necessarily going to be in your final product, just to be able to make your first customer happy. And from our perspective, that's just okay. That's a part of doing business.
Yeah, I'm glad you said that, because I think that question comes up all the time, and we can go back to that in a minute. But I first wanted to go back to what you said about you sat with a lot of planners and merchants. Given kind of your merchandising planning kind of software, did you have to sell basically kind of a couple of different people within the organization in different departments, or was there really one decision maker, at least for that first customer? And then maybe has that changed over time?
Yeah, so it's interesting. So our first evangelist within the organization was the head of innovation within the organization. So he was the one that brought us into the organization, but then our first customers are their head of merchandising and head of planning. And as it is the case, when you have more than one person, everybody has a different vision of like what they're actually getting into. So and then when you are pre-product, there is no single essential product to align everybody around the vision. So everybody, like short of there being a physical or digital product, everybody portrays what they want into what is going to be happening. So there was a lot around like understanding the expectation of different parties and really trying to, being the product manager in that case, trying to like really define how the product is evolving and the trade-offs that are going to have to happen with everybody's visions. Again, in the early days, when everything is so amorphous, it's a fine line, and you're just trying to keep everybody happy at the same time, make a product that actually can survive in its own.
Yeah, I'm interested. I'm so interested that you had a good outcome with a director of innovation, as well as sort of, the ultimate customers that would buy your product. Because I hear a lot of times from founders that, the innovation team or the strategy team or the new product team loved them, but they couldn't get kind of the business leaders who actually had to like sign the budget and actually use the product to sign off. Did you, and you alluded to the fact that they all had like different visions, but was there kind of that dynamic between those kind of two different groups?
Yeah, the tension definitely exists. I think it's always the case. The innovation is always around like I think the main reason for that tension is that the innovation team thinks it happens to be a lot more longer term centric. They see the need and they see that, okay, we need to invest and we'll get it solved within the next 3 to 5 years. And in most cases, operational teams are a lot more about like, okay, how can you help me solve this problem within the next 3 to 6 months? So that tension definitely existed. In our case, I think it usually falls onto the entrepreneur and also the head of innovation, who might have a lot of leverage within the organization to be able to do the education, internal education and internal evangelism. And in our case, I'll say that we were lucky that we had a great partner.
Yeah, that's great. Thank you. Yeah, that was helpful. So you started pre-product with them. You are developing the product in association with this customer. So, did you get paid by that customer to kind of do this product development together? Was that kind of a pilot? How did you, a lot of times I think founders talk a lot about, you should never give it for free to anybody ever. Others say, if you don't start with free, how are you even going to ultimately get anybody to use the product? So how did you think about that?
Yeah.
Where did you end up?
It all depends on the leverage you have. The whole advice of like, you should never give away for free. We've heard it a lot as well, but like pre-products, depending on the organization, like the way that we approached it is that we had a letter of intent to, if we meet these specific milestones, that then they would be like, there's milestones, product requirements, and the contract terms that had to be determined at the very beginning. So at the very least, I would want to make sure that there is a letter of intent in place, though it's not binding, but it actually sets the framework for the remainder of the conversation, and it prevents surprises from coming up. So that's the way that we approached it. And the letter of intent was helpful in our fundraising as well, because investors want to see that enterprises are serious about the relationship. And yeah, we went a lot, and obviously like the scope of the product changed along the way. But again, our partner has been true to the letter of intent, and we moved from letter of intent to like a paid pilot to actual contract.
That's great. And I think this letter of intent idea is a really good one. And I'm glad you mentioned that it helped on the investor front as well, because I do think a lot of times when it's kind of a free pilot, that does not help investors get confidence that anybody would ever pay for the product, I think, which is really important in fundraising.
Yeah, I would encourage everyone to push for it. It's literally doesn't cost anything on the enterprise side, obviously, to get it signed off. But one thing that it requires is that it requires deliberation internally, and make sure that there's internal sign off within the enterprise, which means that everybody knows that this is in the pipeline and there will be budget allocated for this in the future. And yeah, I think it's a win-win for both sides.
Yeah, that's great advice. Okay, so shifting a little bit, I know you changed your strategy around kind of the size of customer that you wanted to go after from a sales perspective. Can you walk us through that process of your thinking and where you sort of ended up now?
Yeah, so I'd say that we changed our tactics along the way. But then our strategy, our strategy is building a central platform that is data-driven to help retailers make merchandising decisions. What we see is that retailers, small, let's say less than $1 million, like once they get to about $1 million, to all the way down to up to like enterprise level retailers, all struggle with inventory decisions. And if they make improvements in inventory planning, it has a huge impact on their top line, bottom line, and cash flows. So we started our journey focusing on enterprises, because that's where the financial impact of wrong decisions is the largest. But and it's still a core market for us. But what we realized in at the beginning of 2000, as the pandemic started, was that a lot of the enterprises with very heavy brick and mortar presence was going to have a lot bigger problems than figuring out their inventory in the short run. Like they couldn't even open the stores. They had to deal with all the furloughs. So we said, okay, who are the customers that are going to be thriving in this environment? So with that, we decided to focus on a specific set of categories that are going to be pandemic resilient and business models that are going to be pandemic resilient, which ended up to our current strategy of focusing mid-market, many in fashion, but also in beauty, home improvement, and then many of them have been growing a lot faster during the pandemic. So we shifted our focus from enterprise into mid-market, which happened to be completely underserved with technologies in the market. So looking back, in the short term, it turned out to be a great decision. In the long run, enterprise is definitely a part of our strategy, though. So it's just a change that we had for the 12 to 24 months.
Yeah, that's great. So, and as you kind of shifted to that, that kind of mid-market customer, let's kind of talk about pricing. I think we spend a lot of time in the RetailX community talking about pricing, both on the D2C side and B2B, because I think it's the hardest thing for founders to figure out, how to charge, what pricing model to use, and then, for different kinds of customers, what is needed. So can you talk to us a little bit about how you price your product, sort of how you got to that model, and do you think you will continue with that model going forward?
For sure. I guess the word on the street is that pricing is never perfect, and there's always a trade-off with any pricing related decision that you do. And I think that's really true. The advice that we got early on was from our investors, which have been, again, very patient and long-term partners with us, is to actually, especially with your early sales, you shouldn't be focused on extracting the full potential that you can get. All you want is, again, it depends on the type of company. If it's a bootstrap company, obviously the dynamics are going to be very different. But if you're a funded company, your focus is to prove that there is a big market, more so than that you can make immediate revenue. So it's going to be a lot more important that you get customers versus how much money you make out of them. That said, and I'll come back to the question, but that said, it's very important that you, beyond the first one or two customers, that you get paying customers, because if people don't pay, again, the amount doesn't matter, but if they don't pay, they think of the tool as dispensable. They don't spend enough time. The moment that they have some money out of their pocket, then they will be taking the tool a lot more seriously. So in terms of how we approach the pricing question, so one of our biggest challenge was that there is no direct competitor to what we're building in mid-market. All the players that have done solutions in this space have been they're all 30, 20, 25 years old companies, and they focus primarily on enterprise. So though we looked into competitive pricing, we couldn't all of their deals were $250,000 to multi-million deals, and that's not going to be palatable in mid-market. So we started looking into other comparable products that are complementary to what we're offering and how much retailers are willing to pay for them. So we started looking into product lifecycle management tools. We started looking into ERPs, and that all gave us ideas around how to do the pricing. And ultimately we ended up going with a platform fee that is a annual contract or multi-year contract, along with per user fee. And yeah, so we looked at a lot of examples, and that's what we landed on for the time being. Our pricing is as of now, we're still discussing as the product is maturing and as we're adding new capabilities, how it's going to be evolving. So we'll most likely be moving into a module-based pricing on top of some platform. But that's for down the line. I'd say that one last thing that I'll say is that early on, I say don't try to overcharge. And you should never try to overcharge, but you just try to keep it very palatable, and then don't complicate it. Another one last thing that I'll say, another thing that we considered was, as opposed to doing platform platform plus users, we debated around like maybe we should do based on the number of SKUs that they manage, or maybe based on the volume of their business. Though there is maybe you could argue that those are more efficient ways, because that's everything is like related to the value that you bring into them. It makes it very hard to understand on the buyer side. So just I'd very encourage keeping it simple in the early days.
Yeah, that's good advice. And I think that certainly a lot of founders I've talked to have changed pricing models a million times. And, I think looking at that comparable, even if it's not a competitive product, but a comparable product that is easy to understand makes a lot of sense. Okay, so I want to shift a little bit to sales cycles. So one of the things working with retailers and brands is, particularly at the enterprise level, those sales cycles can be really long. Now that you've kind of gone down this path of mid-market, can you talk about how long your sales cycle is? Is it getting shorter? What are you doing to sort of manage sales cycles?
Yeah, so I think there's like enterprise. So there's like some good resources. I think like depending on the value of the contract, like what are like some typical sales cycles that you should expect. I think in the enterprise, it's like usually 6 to 12 months, if not more. In mid-market, is like if you are doing like 5-figure contracts, it should be probably 2 to 3 months. And obviously like just like pure SaaS for SMBs, it's just going to be like self-sign up in some cases. Where we are averaging is at this point is about 2 months. We have been pulling it down over time, and what helps us pull it down is product getting more mature, having more reference customers. Obviously, like that really helps streamline the process. And there's a lot more other tactics that we are going to be employing as well. Like one thing that I'll say, and that's like after we added our first sales hire, like our head of sales, who happens to be on this call as well, like bringing in a process into the sales like a very structured sales process with like that is previously planned out, and that you can take the customers along the sale like buying journey, makes a big difference. So I think more like as important as like pricing, the product maturity, reference customers, the sales process is extremely important in shortening that the sales cycle duration.
Yeah, that makes sense. Since you mentioned your head of sales and your sales hire, let's skip to that quickly. So when, at what point in the development of the company and kind of how many customers did you have under your belt before you hired a sales team? I think all the advice that most founders get is you, the founder, are the sales team in the beginning. And then, once you kind of have a little bit of a handle on how sales is working, then you start to hire other people. So can you talk a little bit about that process?
For sure. So the answer to that all depends on the background of the founder as well. I think in the early days, definitely true that the founder is going to be the one that is going to be the most effective in selling, because like ultimately the product is like 20% there, 80% in your head. So you will understand their needs and be able to like dream up the answer, or like talk about the answer in the sales meeting. But in our case, me and my co-founder are both from technical backgrounds. So in such cases, I think bringing on somebody on the commercial side early on, after you've done a couple sales, after the product has been a bit more defined, is actually, I think, extremely important and has been extremely valuable for us. So specifically, we've done 2 sales prior to bringing our head of growth. And then the way that we brought the head of growth is like really interesting as well, because we were doing a partnership, talking about a partnership with NetSuite, and that's how we got connected to our future, like our current head of growth. And she saw the need from the side of NetSuite and decided to join the company. And again, having her join has made a huge difference in terms of how we approach the sales, how we reach out to prospects, how we manage the sales process. So I will not necessarily say, just you have to do all the 6 to 7 sales yourself before bringing on like another head of sales, I think, somebody on the sales side, I think bringing on somebody that has done it before early on really helps you define the value points that you want to be driving in the sales conversations, and can help you actually get customers faster and validate what is sticking and what is not sticking a lot faster. One thing though I will say, I mean, definitely like the founders still have to be very much engaged, like a part of the sales conversations. I'll say that upon like at this point, I'm not like in most of the sales conversations, but it was probably up to the 10th sale that it was like a partnership between me and our head of sales.
Yeah, I'm so glad you mentioned that, because that was going to be my follow-up question of, when are you no longer, involved versus what's that transition period? So now that you kind of have someone who's really focused on growth and sales, have you invested in kind of other B2B press or B2B marketing, or what kind of other techniques are you using besides sort of doing kind of maybe fielding inbounds, but also kind of seeking out customers that fit your profile?
Yeah, so we have not done any press yet. It's an untapped area, and we know that there could be a lot of impact of that. But the way that we see sales is like threefold. One of them is like direct outreach, and we've been seeing great return, very high conversion in direct outreach, and we've been using a lot of warm introductions to make them more effective, both based on like our previous connections, the referrals from customers, and also our investors' connections. So that's one channel, outreach. The second one, which is going to be is proving to be more and more important, is like partnerships. There's a lot of partners that are very peripheral and very complementary to us, such as the ERP or PLMs, that customers will adopt Toolio maybe before or after, but always like within a specific sequence to those peripheral techniques. So like being a peripheral technology, so being in the radar of your partners and working very closely on your prospects has been extremely important. And like 40% of our sales in the last quarter came from partnerships. And the third one is inbound, which again, I guess we can put PR maybe as a part of that. But we have not done paid advertising yet either, but we've been getting pretty good inbound from just organic traffic but we've been very deliberate about getting content that our customers will be searching for. And there's a big scarcity of good content in the planning space. And that's been an area of focus for us. I think there's a lot of like other like growth channels that we can tap into, but with a limited team at this point, we've been focusing a subset of that.
And have you found, I guess maybe because of COVID, it's not the same, but kind of some of the trade shows to be helpful?
Well, I mean, we've attended only one trade show, though not as a participant or like a host, but just like more as a just to see. I think it's been very helpful in looking into competitors, but like we haven't like used trade shows to like get more customers. And I'll say that I'm not necessarily convinced at this point that our customers are in mid-market are the ones that are attending trade shows. I think in more enterprise, definitely from the Walmart perspective, we used to attend the trade shows to look into technologies, but I might be wrong, but I think it's going to be less and less important is my take.
Yeah, I mean, certainly COVID has changed some of the dynamics around that anyway, and perhaps that's less important than other kinds of events. Okay, I have one more question before we'll turn it over to the audience questions. So some of you I know have already been putting questions in the chat, but if you have other questions, you can start putting them in now, and we'll get to as many as we can. But so my last question is kind of, what's the one resource that you would recommend to founders in the audience who maybe are starting their journey down kind of sales, whether it's to mid-market enterprise or even smaller kind of long tail businesses? Were there any resources that were really helpful to you that you'd like to share?
Yeah, definitely. Again, from me not coming from the sales background, I'm trying to learn from people that know it as much as possible. So I've been looking into like SaaStr quite a bit by Jason Lemkin. He like his posts are really spot on, and he's like very quantitative. From like I've like looked at like From Impossible to Inevitable, again by Jason and Aaron Ross, has been really helpful. Just to help you structure how you think about the different phases of the company and how you think about like the different functions, even if you don't have different teams, but just like how you should be thinking about structuring the organization or you're structuring your time. And another one that is probably like a very common one that is mentioned is going to be like crossing the chasm. It's very, very relevant to understand the mindset of the early adopters, which what they're there to look for. So, I mean, I think there's a lot of like really great resources out there. Yeah.
Great, thank you. I probably should have put those in the chat, but it went a little fast for me, but
I can share.
Yeah, if you wouldn't mind sticking them in the chat for anybody who is
For sure.
Interested. I'm going to switch over to the Q&A from the audience. I'll read out the questions just so that we'll have them on the recording. And somebody did ask if this is being recorded. Yes, it is being recorded, and it'll be on the RetailX YouTube channel in a few days. So the first question is from Philip. Do you think mid-sized retailers accept a pre-product partnership, and what do you recommend in convincing them?
So that's something that we debated a lot around. It's harder because mid-market, and again, depending on the maturity of the mid-market, like because mid-market is broad. We define mid-market to be anywhere from 25 to like $500 million in terms of revenue. I think more so than how much their top line is, the maturity of the organization will, and where they are within their growth cycle is going to determine the answer to that. Companies in their early days, like let's say in their like 5 to 10 year, if the old companies, they will be a lot more hectic because they're growing if things are going well for them, and they will not usually have patience for products that are not fully baked, like that are like fully pre-product. I think they can be early adopters, but like the dynamic that I shared with our first customer, with like them opening their doors for a year and working alongside with us, I think it's a lot harder in mid-market because they don't have that luxury to spend time with an emerging company. Though there's always like exceptions. I know like from like Andy Dunn, I know that he was like in their early days, even as Bonobos was a small company, I know that he was very interested in technology and either like incubating the technology for retail tech internally or supporting. So I think it will just depend on the type of CEO. Usually I think this is the CEO that is going to be signing off in a mid-market retailer.
Great, thank you. The next question is, if you have limited connections within the specific industry you're targeting, which channels and strategies do you recommend to connect with enterprise decision makers, and what should the messaging be?
So I'm thinking, I think that one is a harder one. I think, because the first thing that you'll have to prove, well, I mean, it depends if we're talking about a vertical SaaS or a horizontal SaaS. If you are building a vertical SaaS, which is very domain specific technology, it will be harder, like not only like getting in the door, but also building the trust that you know the domain well enough is going to be harder. Like I think even though we didn't work on the same exact problem within Walmart, the Walmart name and having seen Walmart internally definitely made a big difference in convincing the retailers, because yeah, everybody's curious about how Walmart did things. So I'm thinking, so I would try to like I would either like try to be extremely knowledgeable about the space through advisors or like through spending time with people that actually know the space. But yeah, I do think it's going to be more challenging if you're trying to build a vertical SaaS, unless you can say, here's my experience and here's exactly how it translates into this. And this is why I'm going to be solving your problem.
Yeah, and I just might add that sometimes the accelerators in the space can be incredibly helpful in getting you up to speed, and finding advisors who can really also be helpful in helping you understand the navigation of a particular vertical.
Yeah, accelerators for sure. Investors will be fast. Like it might be easier to investors might understand technology better than the end customer, but investors can have that relationship with the retailers that can really connect you. So definitely, I think that's a interesting direction.
Great. Next question is, at what point did you fundraise? How much traction did you have?
Yeah, so we fundraised very early on. We fundraised after we got our letter of intent with our enterprise customer, after we defined the space, and after we had a prototype, but not a full product. And I think in hindsight, it was the right decision. I think in some cases, it might be better to just like keep pushing forward, as opposed to doing a proper fundraising route, maybe just doing the accelerators to really hash out the concept, to hash out the product and get the initial few customers. It will all depend on what is feasible given your background. I'll say that the fact that we sold the previous company was very, very helpful. And how much, the earlier that you fundraise, the more dilution you will be getting. So it depends on, do you need the fundraise, or can you push it out a bit more and then get raised on more favorable terms?
Yeah, and you probably, that Walmart experience as well, like not just selling your company to Walmart, but being at Walmart and seeing some of the problems from internally were probably pretty compelling to investors.
Yes.
Yeah, so I think a lot of times I talk to founders who are kind of in the B2B space who didn't come from the industry, and it is significantly harder to fundraise if you didn't come from the industry super early and pre-product or pre-customer. So it is definitely dependent on who you are as a founder or who your founding team is and what experience they have. Okay, the next question, this is a great question. Did you have a lawyer involved while preparing for pilots?
Yes. So for our pilot, so the way that we approach contracts, and this will change as we mature as a company, we tried limiting lawyering things up as much as possible. So I think there's a lot of good templates that you can either get from your legal firm or there's like some templates out there as well that you want to keep things as simple as possible. So actually, like the way that we did the letter of intent was just actually crafted by us alongside the retailer, so that we didn't do a lot of like legal back and forth. But then afterwards, the way that we approached it is like we did only one pilot, and afterwards beyond those, like they were like all paid contracts. And the way that we've approached it is that we got like one template contract that we got from our legal team. One piece of advice is that when you get, your legal team is usually focused more on protecting you and not necessarily giving anything favorable to the customer. But I think if you go with a very strict contract, then things just get delayed a lot. You get a lot of red lines. So I think it'd be important to like look into other contracts from other SaaS companies and figure out like where you want to sit in terms of leniency versus strictness in your contracts. As a company, I think a good way to think about contracts is like good companies think of their contracts as a part of their product. And even the language is a bit different, it's a lot more simple. So I think erring for simplicity and finding the right balance between protecting yourself and protecting customers is going to be important. And I think it's only something you can do as opposed to lawyers that don't necessarily understand your business that well, nor the customer's mindset. So I think there's a lot that falls onto the company itself, more so than the legal team. That's been our approach.
I mean, I think that's really good advice. And I think I've actually heard this from other founders as well. You know, the lawyer's job is to protect you from all kinds of risk, but that's not generally the way contracts get signed quickly. So yeah, keeping it simple makes a lot of sense. Thank you for sharing that. The next question, where is the next question? Oh, what happened after pilots? Did they turn to your customers? Can you elaborate on the process? But I think you just mentioned that you only did the one pilot and the rest have just been customers, like contracts straightforward. Is that correct?
That is correct. And I think that for the initial pilot, the most important thing is, again, crafting a very good process around like how it's going to be piloted, how it's going to be measured, who's going to be making the decision on moving forward. And the timelines and then the commercial terms. The more that you can, it feels tempting, and we've done some of these mistakes ourselves. It feels tempting to just like get to the business, let's build the product. The more you can hash out early on, the more time you will save down the line.
Great. Oh, did you join any accelerators? And if so, what was your experience like?
Not with this company. No, we did not. In our previous startup, we joined an accelerator. I think accelerators are great to help establish the structure around the company. Though it's a contrived model of like 10 weeks, and by these like 10 weeks, 12 weeks, you have to do this, and there's a demo day at the end. It actually establishes a very strong structure and accelerates the way that you should be thinking about the business. So I do think there is a lot of value, especially for, I mean, I think there's like a select number of accelerators that I would always consider, but even outside of those select number, I think if you're a first-time founder, I would always I would encourage joining an accelerator, because there's a lot of things to learn as a first-time founder, also as a second-time founder, probably as a third-time founder as well, but you learn along the way, and if it's your first time, I think there's a lot that you can learn from others.
Yeah, great advice. I think there are also lots of different kinds of accelerators, ones that don't take equity, ones that work on kind of your personal management style versus actually your business. So I think there's probably a lot of different options, many more options today than there were even a couple of years ago. Okay, next question. If you're a first-time entrepreneur selling a SaaS solution to retailers, how do you approach larger retailers to be early adopters? Or how many reference successes do you need under your belt before targeting those larger retailers?
So I think it's hard to group all the enterprises together. I think a very important thing to do would be to be able to classify those different retailers based on external signals and really go after what are the ones that are exhibiting early adopter behaviors. So again, I think sure we can come up with like overall heuristics, but ultimately you want to go after the early adopters. And otherwise, because like some of them you can never, like even if you have a solid product with many customers, if you are a startup you don't have like if you don't have a very strong balance sheet, they will never take the risk. And it's understandable. It depends on the persona of that retailer. And then even within a retailer, like it's all about like finding the right person. So a retailer that is usually risk averse might have a very risk liking, or like an entrepreneurial person internally that can be a lot more open to innovations and acquisitions. I've definitely seen that at Walmart. Again, within Walmart, if you approach the right person, you can actually get things done. And if you approach the wrong person, even if you have an amazing solution, there's no way that you're going to get anything done. So it's about like finding the right retailer and finding the right person. I would actually even start with the person. So, and then the way that I would approach it is, and I'll come back to the very specifics, but I would approach it, okay, which retailer has an innovation arm? Because that means that the CEO has signed up on something innovation related. I would look into like how they talk about their technology in their public releases, public statements, annual statements. They usually talk about that. And then I would look at the background of the person within the retailer, with no offense. Like if that person has done a startup before, or like has like maybe joined the company with an acquisition, he's going to be a lot more interested. But if that person has been there for 30 years, maybe he's like more vested in the way that things are running. So I think, again, finding the right person, building the connection with that person is going to be a lot more important. In terms of, those would be the ways that I would approach. In terms of how many reference successes that do you need under your belt, I don't think there's any hard and fast number, but I think, again, it depends on what kind of references that you have. If those are retailers, because these days retailers are really looking up to the digitally native brands. And if you are working with some brands that are really well recognized, then it will just like every retailer wants to be like the young kids. So that will make a big difference.
Great, thank you. The next question is related to the legal question that was previously asked. What type of business insurance did you use in the early stages? Or did you?
Yeah, we did. We did. I don't know the specifics. I think we went with something pretty like out of the box. I would just like look at what like, I mean, there's a lot of like information on that online, but I mean, you want like obviously you want all the legal, like all the things that there's a lot of the things that are mandatory for your like insurance. And then there's like omissions and like things like that. I forget the name, but there's a lot of like insurances, like professional service insurances. Yeah, I think it's best practice because you don't want to be sued and like, yeah. So, and then there's other things like that are protecting you around like cybersecurity, being hacked and all that. So I don't think you want to be going overboard, but the basics you want to have.
Great. The next question is, did you consider prepayment from your early customers for a long-term license? Kind of like an investment? Did you consider that?
That'd be great. I don't think it's, yeah, I don't think, I mean, it's almost like an investment in that case. I know there's examples. I think that would only happen with more of a trust. Like I see that happening with like a lot of spin-offs from larger retailers or like larger enterprises, and like Cisco is notorious for that. They invest a lot of like into spin-offs. But for you to be able to get a long-term investment for a early product, I mean, I guess the person that is signing off really has to trust you and know you. Yeah, we did not do that.
Okay. The next question is, when did that first customer start paying you? Was it after signing the LOI or after the pilot started? Kind of when in that process did you get paid?
After the pilot started. So the LOI is, like letter of intent to pay if you deliver a product that is meeting the expectations within a specific time frame at a specific rate. So we started off with a paid pilot, and then afterwards that converted into a contract.
Great. The next question is, do you have good techniques for managing tech integration and getting your product prioritized on the roadmap?
Yeah. I mean, so we are a very integration, like our tool requires proper integration. We need product data, sales data, inventory data, purchase order data. What you really have to do, and people are like typically afraid of like integration because the developer resources are scarce everywhere. So as a technology provider, you want to be able to have turnkey integration where possible. So a lot of the things, so that you don't need IT resources, technology, engineering resources to be able to do that. So we needed to figure out a way to do all of these integrations to be able to get all this data without requiring technology resources. So without going through the prioritization. Sure, it would be harder to do that in an enterprise, but I think the landscape has changed dramatically. Like in mid-market, there is a much more standard technology stack that like everybody's on Shopify. Many people are on like a common set of ERPs, including NetSuite. And if you build out integrations with them, you don't have to go through the product prioritization within the technology company. If you can't do that, the next piece is like on the enterprises. I think enterprise technology landscape has changed a lot as well. I think any enterprise, I'll say like 75% of enterprises will have a data lake or like a data warehouse. And if you can do integration with that, and you'll have to do a lot of the groundwork yourself. Like we did that with our like enterprise deal. We had to like, as opposed to like integrating with 4 tables, we had to go through like comb through 100 different tables and like really understand where the data is structured. But again, you really have to like figure out a way to use their existing infrastructure or tables or databases to be able to get the data that you need so that you don't go through the product prioritization, because otherwise you can't get the product off the ground. I don't think there's any way.
And it used to be that there were certain times of year that there were just not good times to be selling into whether it was enterprise or mid-market, honestly, like, kind of code freezes in October right before the holidays and things like that. Has that changed in your mind? I'm kind of adding on to this previous question.
Yeah, I think that's changing. Like, okay, within Walmart, I'll say that like all the decisions will be done in Q2 and Q3. Q4 is like Q2 most likely. Q4 is like nobody talks. Q1 is everybody's coming back from like holidays and then just like doing like the top level OKRs. Then Q2 is like where you act and then everything. And then Q3 is again holiday preparation. I think these days it's different. Like in mid-market especially, I don't think like, well, the holidays are no longer the sacred time of the year. I think Amazon has been changing it for quite some time. And a lot of the digitally native retailers, yeah, though people are more festive and are willing to spend more, but you don't see a lot of big steep discounts around the holidays. So I think, I mean, holidays are still important, but I do think I think it's not like everything is frozen during the holidays. Actually, like we had our biggest, one of our biggest months in December. So right after November. November is a tricky month, but I do think you can sell year round, depending on the segment of the market you're operating in.
Great, thanks. Okay, the next question is, did you face any challenges or unexpected events while doing that enterprise pilot? And if so, what did you do about it? Did you hit all those proof points that you had laid out?
I mean, I think challenges will always happen. And then I think hitting all the proof points, I think like the initial letter of intent is more important in establishing a structure versus like treating it as a checklist, because as you start, as everybody's like, product is very dynamic in nature. Like, and as you start, you realize that some of the things that you've put on the paper are no longer relevant. It's all around like being able to revisit the letter of intent on a time to time basis, making sure that everybody's aligned. And if you're not hitting all the proof points, as long as you're hitting the important ones that they care about, you should be good. So it's a lot around like managing the expectations and the communication.
Yeah, I think maybe as an addition to that, I'm going to kind of skip ahead here, but another question was, did you have any customers that asked for extra features? And I hear this a lot from a lot of early stage founders, whether that's with your first customer or even your second or third. And then how do you manage that? And do you give them the extra features just so that they will sign with you?
Yeah, well, it all depends on the leverage of the customer, like how much you want them. So ideally, like, okay, all the extra features that they ask, unless like, especially mid-market, the asks are fairly similar. I don't think you're getting like really strange one-offs. Like I think like in enterprises, the organizational structure is being portrayed on the product asks. So every organization will be a bit different in enterprise. So the ask that you will get will be a bit different. So the good advice that I've received on this was, okay, product roadmap, you maintain the product roadmap. You don't necessarily change it around based on what the customers are asking, especially in enterprise. Like the suggestion that I've heard is like maybe you have the option to accelerate product development by paying for it. So if an enterprise really wants a specific capability, they like, which is like a year from down the line on your product roadmap, you can accelerate it by asking them to pay for it. And that we've seen, that we've done. In mid-market, usually we look at if you want to really close a deal, and if what they're asking is like we're anticipating that it's going to be coming from many others, yeah, we would sometimes accelerate it. But yeah, so I think you don't want to be super reactive. I think the most important thing is always going to be around like setting good precedents, like having a good product roadmap that you can share with your customers that helps establish trust and establish gives them a better understanding of what is coming down the line. And if they really want something that is pushed out for now, that you can just either like bite the bullet and do it for cost of acquisition, and think of it as cost of acquisition, or ask them to cover the cost, which again there's a lot of precedence for.
Yeah, that's great advice. Okay, we have one more question and then we're going to wrap it up. How did you go about tech support and maintenance during that first pilot? Did you dedicate a full-time employee or did you provide limited support? How did you handle that?
I mean, I think I'm not sure about the specifics, but with your early customers, and I think like with all your customers, 24/7 support, you have to be on top of it always. Whoever like is doing it, I was doing a lot of the support. Yeah, so I think with the early customers, you really like, especially the product is not going to deliver everything that you want to deliver. So you have to go above and beyond with services and the additional touch. So yeah, I think everybody were dedicated, I'll say.
Yeah, make those first customers happy, right?
Yeah.
Okay, well, I think this was great. Eytan, thank you so much for your time and all of your insight on sales and kind of this whole process. This has been great. Really appreciate your joining us today.
Thank you for having me. No, it was fun. It was great. Hope it was helpful.
It was, I'll say for myself, it was very helpful. If I ever start a retail tech company, I'll go back and listen to this. But I'm sure everyone found it very helpful. We had great questions. Philip, little shout out to you for lots of questions. Thank you for all your input. And like I mentioned, everyone, next week we have a session on fundraising. You will also get an invite into our Slack community and put on the email list if you haven't already been. And thank you all for joining today. And hopefully I'll see you all next week. Thank you again. Bye.
Thank you. Bye-bye.